Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 15th, 2022. In this video, we'll do an update on the education and training stocks. And before I do that, get into those, just again a quick update there because we're starting to see some movement in the sector, and buying tends to beget more buying. So the more of those that pop, meaning breakout of resistance levels, then the more likely you are to see the momentum traders come in and start playing. And when the momentum traders come in, start moving them up, that's when you tend to get a short squeeze, especially on a beat down sector that's been left for dead like that. So again, fundamentals means zero when you're trading technicals like this, especially, these aren't stocks you're looking to marry, or at least I'm not looking to marry these. I want to date these stocks. These are my Tinder plays. You just want to get in, get out, get a quick pop, and move on to the next one. And again, the sector, like I said, not speaking to the fundamentals. I don't know much about it. Just that what happened in China a little while back that knocked the snot out a lot of those stocks. But I'm going to get to those in 1 second. Just a brief update on QQQ. There's that 60-minute downtrend line I posted yesterday. There was a bear flag, so we had one whipsaw candle, one red candle that moved down through there, but then immediately you recovered the trend line on the next candle. We closed, see the green candle closed above it, and then followed through. So there was a false breakout of the flag. But again, it was a single candle. That's why all the better if you see multiple candles. It looked legit, but again, we recovered it right there, and then got above the trend line and closed above the trend line. And it just during the after-hours session, we ramped up. And say what you want about the charts and technical analysis, but it's hard to argue that level that was the one laid out yesterday is not a significant level. That was based on all these lows of the bodies of that candle and the bodies of those two candles there, as well as some levels back here. Reaction high, big candle there, some candles there, gap. And that's it. So let's not read too much more into it. As I said, I view that as an objective shorting op. Should the accused manage a push up to that R2 next resistance level, that would also be an objective short level. We may not get there, so I'm more prone. As of now, this is my primary scenario that pop will be faded, and we'll see. Again, I'll do an update if and when we break up to R2 or if we get rejected off that level. If you do and you're an active trader, well, a natural target would be a backfill of the gap right there at minimum. Now we could backfill the gap and go up, probably bounce if and when we backfill it. And so what you want to see if you're looking, let's just say you want to check mark for the bears, you want to add to short positions, well, you'd obviously want to short resistance. It's much better to short high than down here, but the next objective short level, if you want to add to it, would be a break if we solidly take out the gap, because that's where, and I put it in quotations, quote unquote, the buyers should step in on a gap backfill. The bulls should step in. And if they don't, it just tells you there's still more sellers than buyers in this market. And that's it. It's simple economics 101. You learn that in high school, or if you went to college and took any economics courses. It's just supply demand. When you have more demand for stocks, more buyers, prices are going to go up. And when you have more supply or more sellers, more supply of stock being sold, more sellers and buyers are going to go down. And so these are what we look for. And so far, it's obviously been a clear downtrend since the Nasdaq 100 peaked all the way back in November. Stair-stepping lower. You can turn off all the lines, and it doesn't take a master technician to say this is a downtrend, at least in the intermediate term for the last few months. And where will that start to change? Well, early signs. It's not an all or none thing, but you have some higher highs right here, these two higher highs, and so far 3 higher lows. And so, obviously the bulls would certainly get a check mark, the bullish case, if it took out that previous reaction high from right there. Likewise, if we take another leg down, start taking out these previous lows, then that's kind of bigger picture stuff. Just shows that was a counter trend rally. So that's the way I'm still treating it for now, because although a lot of the long-term indicators remain bullish at this point in time, a lot of the short and intermediate term trend indicators remain bearish, and therefore that's why I keep I'm showing you levels to watch and posting objective levels to short into on counter trend rallies. Okay, now on to those education and training services companies. A lot of those, again, a lot that I highlighted. Some, many, but not all, were Chinese companies, and again, they're just the technicals were really nice. That's why I highlighted that. That one was COE bullish falling wedge. I highlighted it back here. I think the video was on Friday. I gave you a link. By the way, in those videos, that link I gave you on both COE and the next one I posted will start at the coverage of those particular securities. So on COE, if you click that link in the update today, it'll show you, and that's where it was about. I think it was 135 when I was highlighting it and told you it was an objective entry because it had just broken out. So you hit T2 for a 70% gain. That's pretty significant resistance. You can see all the support right here, all the dancing on that line, and therefore an active trader was able to book profits there today. It was above, even in pre-market it was a little higher, but the high of the day right now on the regular session is 225 versus that target of 223. So close enough for government work. You reversed. You could have shorted if you wanted. That's a little dangerous because sometimes these things blast off. But if you took profit, you can recycle back in on the pullback today. And I think, we could pull back all the way here. I still like this one. I still favor. This is still my final target, and I still think it's going to go there. It's a matter to pull back a little more. I'll get to that in a second, and I'll tell you why I don't think so. But that will depend on everything else I'm about to cover in this video. So I think that pullback today was probably about it. You can see the buying has been pretty voracious so far, and they usually, not always, but usually in these type of stocks, you just have to take this from years of experience. From what I've seen, they don't like to let the shorts out easy. It's like a bloodbath, the short squeeze. It starts going up, momentum traders pile in, and shorts are getting squeezed out, and they're just hoping for a pullback to exit, close their short position, but that usually doesn't come for them. Likewise, longs get denied entries. Those that didn't want to take it here on the breakout and now see it moving, big volume. I don't know if you can see these volume bars, big volume on this move, and so a lot of what I call JCL longs, Johnny come lately longs, want to get in now, but that's what happens is these stocks sometimes don't let you in. In other words, what I mean by that is they don't give you a nice healthy pullback or a back test of the wedge. You don't want to see a back test of the trend line at this point. It's possible you get it and it still works, but this darn thing is since the breakout less than a week ago or about a week ago was run up 155%, and so that's the next target. It will be about a 321% run if it gets there, and from where it was mentioned the other day right there, about 135, 136, if we hit that level, it's going to be about 173% gain. And that's where, again, I replied somebody there was some comments under the post today on COE, and a lot of people missed them. They don't take them. A lot of people don't want to touch these sectors, and maybe I scared everyone away, and that's fine. I'll do that all day long. Tell you the risk of these things. This thing could turn around. This thing could wait. I could wake up tomorrow and see that this stock filed for bankruptcy protection, and I have a huge gap down. But again, I'm mitigating. I have a shotgun approach spread out on a probably close to a dozen, if not 10, at least 10 names in the sector, little bits, because you don't need a lot. If you're shooting for, again, do the math on everything. And again, if you risk a lot, you're going to lose a lot if it goes against you. But if you're shooting for nearly 200% return on a stock, it doesn't take a lot of money put into that stock to make what you would normally make on a regular trade. In other words, if you put 20 grand in Apple, that's your comfort zone. You don't put 20 grand in this thing. You put a small fraction of that. All right, let's move on. Either way, perfect tag, near perfect tag at T2, a little pullback there, and still think we'll get a thrust up. And let's talk about that. What we need to see. I'm just going to rifle through all the ones I covered in that video on Friday. And this is iHuman, not moving yet, still potential divergence, but still heading lower. This one I don't see any buys in there. It needs to take out the trend line and or this 318 resistance level there. So not one of my favorites. I'm going to kind of tell you which ones I like better than others as we go through here again. I think I did that the other day. CHGG, this one's looking nice. I see a nice impulsive thrust up followed by what appears to be a little bear flag or bearish pennant there, and we're right at that. It's flagging right on that 3120 resistance. This is a basing pattern, and it has big positive divergence. So if it can pop this, it's probably going to go right through the trend line. I put a higher weighting on this 3120 resistance level than I do the downtrend line. Why? Because I only have two reactions so far, and technically in my book that's not a valid trend line because it needs 3 points, three distinct reactions off the trend line to make it valid. This one was close, but either way, I think we'll just pop right on through there and hit up this. So this is really my first target here, T1 39.35. And again, the takeaway from this video is to watch it, set the price alerts like I've done, and if you start hearing them all pop and they're going off like popcorn within on the same day or within on the same week, within a few days, one after another starts breaking out, that's where you get I've seen it 100 times, the birds of a feather flock together. So the fundamentals at that point don't matter. There's a technical rally, momentum traders are coming in, shorts are getting squeezed out, and should it hit just that first target right there, you're talking a 27% pop. And then there's a monster of a gap above it. That's the thing. This is where, when China came out with the regulatory changes to the sector, that's where a lot of them got, the snot knocked out of them. And then, but again, it appears the selling may be over. And, I don't know if these stocks are left for dead or not. But again, I don't care. Get in, get some quick trades, get out, or get stopped out, move on to the next one. It should never be a substantial chunk of anyone's portfolio because these are speculative, AK, or aggressive trades. CHGG, there it is. So there it is. And again, just kind of hone in what you might want to look for. Just take it on a breakout of the flag, right? If you can see this start to move up on volume, increasing volume, impulsively out of that flag, that's your breakout. And then it should run. Next one up, HLG, liking this one too. You got that same kind of pattern. You have resistance here at about 1338, positive divergence, and it's just starting to crack. So that's why I'm doing the video. A lot of these stocks, even more so when I highlighted them last Friday, are poised to break out, and they're right at, or some of them, quite a few, like COE for example, have already recently broken out. And so you can see target one, second target would be this downtrend line right there. That's a potential third target if this sector really gets some traction. And a strategy for that is you just, if you break out and you're up, you got 20, 30, 40, 50% or more gain on this trade. You can allow a relatively wide stop and then swing for the fences. Maybe you get a big run up there. That would be a run of about 121%. ZVO, divergence building, but really it's in a downtrend. Needs to pop these trend lines. So not one of my favorite, but again, you can take that shotgun approach. But I also mentioned I do the shotgun approach, but I'll then strategically or more so tactically add to and subtract, meaning reduce, close out those positions. Like for example, on this one you'd want to see a breakout of the trend line here, this trend line, and then a run up to 132. So that one hasn't yet broken out. TAL, it did break out. It broke out of the downtrend line. I think I mentioned that in the video the other day. It came in for near back test, and we're testing right now. We're at 380. I had the resistance line at 379. Close enough. You got to give it a penny or two. So it's testing resistance and up 22%. So if this one can build on today's gains and then hold that breakout, it's probably going to go up pretty quick and hit this first target zone, 577 to 656. And that's going to give you about a quick 50 to 70% return. And then again, there's that monster gap yet to be seen. Right now, I'm leaning towards just a run up to the bottom of those gaps to back test those. And I think that's an objective play, especially if you get it quick. You get 70% on the stock in a few days. Again, you want to, set a stop and hold out. The only downside to doing that, let's just say you hit this and say, okay, Randy, I think we're going to backfill those gaps. And you set a stop somewhat below to kind of protect profits. Well, if it gets rejected off resistance in the form of a big gap down, it can bypass your stop. And so that's why I don't really feel. I just, like I said, I'm giving you my thoughts. If you get there, even we're not even we haven't even broken out, and the work to be done. But again, the takeaway is more and more. The more of these that do break out, the more likely it is the rest will follow and also break out. And those that have already broken out are more likely to hit those higher targets that I have. STG, this one broke out down here. It's been in an uptrend. It's been working its way up. Not a perfect uptrend. Not one of my favorites. Just there's the levels. I'm going to skip on it. GOTU. I like this one. That one had a nice clean trend line there. Big divergence building for a while. Broke out. It's been walking higher. Not taken off yet. It's not exploding. It's a low price stock, but you have a little uptrend line right here following the breakout, and I don't see any significant resistance on this thing. There's minor resistance here, but my first target's 276 and 346, 431, and that is again my preferred target. So remember these gaps, the bottom of the gap is where I think a lot of these stocks are going to be within the next week or two here, a couple weeks. And they happen quick too, just like I always talk about. Well, I love shorting because stocks tend to fall faster. I like explosive setups. Sometimes these junk stocks are the ones that I'll flock to and start trading. And if we get it, that'd be a nice run from wherever it was. I probably highlighted it here. I don't know. No, it was right here, February 11th. We're right about where we were in that video. So if you really zoom in here, you can probably say we need to just pop that recent high right there. You can see we're pushing up against this level. Boom, boom, boom. That should do that. LAIX, pretty clean downtrend line. Decent one right here. Not one of my favorites, but close to it. I like it. Again, worth putting in. I believe I have some of this one as well. There's penny stockville, so the risk of bankruptcy, a sudden bankruptcy filing, is always in the possibility. And again, maybe that's already in the works. I wouldn't even know because I don't bother looking at the fundamentals. I'm just trading these technically. 84, 107, 141. Actual resistance levels. You may want to sell a penny or two below your preferred target or targets. What I mean by that, sometimes just I scale into a position. Sometimes I'll scale out or have multiple exits, multiple lots. And again, you trade them as you want. But that's the max target there is 141. COE already covered. REDU, Rise Education. Needs to pop that trend line, which it appears likely to happen soon. Run up, hit this trend line, take that out, and pretty aggressive target on that. Penny Stockville again, and that's the other thing. Note that some of these, if you go down, this one's 49 cents. You want a smaller position in this than one that's selling at maybe 10 or $20 a share, because this is things being priced for death, and maybe it is going to die. Meaning, go to the wayside. But if not, we can get a short squeeze and there's enough momentum in the sector. We could run back up to that 187 target, and from where we're at today, that'd be about a 290% return. So, worth the risk to some and maybe not to others. Downtrend line, AFYA, working its way down in this wedge. Maybe more downside to come, maybe a lot more, maybe not. Needs to pop the way. I can't make a case because you can't. I like to either buy at support or on a breakout above resistance, or layer in if it was one of my favorites, but it's not. It's worth mentioning. I have it flagged, and I think I covered it in the last video. All these I should have covered in the last video. They're my flagged stocks in the sector. STRA, Strategic Education. This is looking pretty good. A little double bottom there, positive divergence. We've been building divergence actually for a while, and a nice, again, this is a common theme here, a nice little basing pattern right there. So we can come up there, pop, we're going to pop the downtrend line, and then 60.76 resistance. Boom, should be a quick ride up to 68.51 once 60.76 is taken out. That would be a quick 12-13%. Probably get a reaction there. And then up next target would be 79.33, and that's all. Let's just say that's the target I'm focused on now. Let's just again, I have these other longer term ones just in case the sector happens to explode. You have numbers out in front of you where they might go to, but as of now, I'm just looking for these intermediate targets on a lot of these. RYB, kind of a sloppy chart, kind of even a sloppy trend line's been violated a few times down through there. So not one of my favorites, but it recently put in a divergent low, and there's some levels for it. AACG, it's kind of a lot going on here. You had an uptrend line which was broken, a little bullish falling wedge. It spiked hard, back tested the uptrend line, or yeah, the uptrend line, and then pulled back, and it's been back testing the downtrend line. This is your downtrend line. And so kind of pinching between or bouncing like ping pong between support and resistance levels, and you also have price support about 143. So again, birds of a feather flock together. So I think if we see start to continue to see some traction in this sector, and there's still others that are still going down. So if we can start to see broad-based participation, then this one probably hold that 143 bounce up here, and ultimately that'd be my max target there, 346. Be more than a double on your money if it hits that. ZME kind of had a huge explosive move out of the bullish falling wedge, but too big to chase if you weren't already in it. It was highlighted back here before then. I first touched on this sector, I think it was back in December here. Had that big pop, came back in, and it's kind of no man's land right now between support and resistance. So I can't really make a screaming case for that at this point in time, other than, if you want to just sprinkle things around a bunch of cash and different stocks in the sector and kind of have your own little quote-unquote mutual fund where you're diversified, a basket, kind of like an ETF. There's EDU. I mentioned this on the comment section. Okay, guys, I'm going to have to loop back in the video. There's a shortcoming to this video recording software. I often pause the recording as I'm doing the video to go to the next chart, look at my notes, collect my thoughts, and when I unpause it, a lot of times that you click it and doesn't take that pause button when you click it to unpause and begin resume recording. And so I'm going to contact the developer today. It's a big company, and see if they can add some kind of feature where it flashes red when you're paused, and so that quits happening. So sorry for the to digress here. I'm gonna have to loop back because I do not know when that happens. I don't know where I paused it last. So I'm gonna go back several stocks that where I think I was. Hopefully I was, and I'm going to start here with TAL. If I missed, here's the order I should have went through today. IH, CHGG, after starting out with that China online education, of course. HLG, there's the chart, ready, poised to break out, divergent low, everything else. So I'm just recapping quick. ZVO it's still in a downtrend, needs to take out the trend line there. AMBO, it needs to take out this secondary trend line there, and then big run up to 132, 170. TAL, and what I had talked about too, and again, I don't know if I already covered this, most of my final targets right now are the bottom of the big gap. This is when China made the regulatory changes, so a lot of the Chinese stocks, and again, all these are not Chinese, but most of these are. So that would be my max target now. So in this one, for example, I really like it. It's testing the 379-ish level now. It's at 376, needs to pop that nice level, and if so, it'll run up. I have a target zone 577 to 656, and that would be a run of about 50 plus percent, 53 say to about 72%. And there's a potential for this, so I talked about that before as well. Hopefully, I don't know if it came through or not. If you want to hold out, you can set stops and let it run. You'd need a fairly wide stop. You're probably going to have a reaction here. It could be, as of now, those are my final targets. If it happens and it happens quick, take the money and run. That's my theory. If it takes a while and they base and you get even a stronger basing pattern, and then there's some positive fundamental developments in the sector, maybe hold out for that. The only downside is if you go home and it parks around in that target zone, and you go home with a stop right here, you could wake up to a big gap down. And so that's where, if and when we get there, I'll give you my thoughts. And the other thing I was mentioning earlier, I don't know, again, if you already heard this, that, look, the more of these that break out, for example, that are at resistance, whether it's price or trendline resistance, the more that break out, and ideally on volume, high volume, impulsive moves, the more likely it is the rest will then follow and break out as well. So I'm seeing definitely some positive signs here. Some have broken out, some are running. And the more that run, the more likely you're going to attract those momentum traders that will come into the sector and play, as well as when they come in, they start hitting those hard, they start buying the stocks, and then the shorts get squeezed out. Remember, these stocks were left for dead. Undoubtedly, there's quite a bit of short interest, I imagine, in most of these stocks. And when momentum traders come in, the shorts start to get squeezed out. It could be a beautiful thing if you're on the right side of a short squeeze, that is. All right, next up, again, you may have already seen this one, STG. Not one of my favorites, but worth mentioning. There's a downtrend line. We took out this trend line. It's been working its way up here. Um, Next up, GOTU. Nice one here. I like this one. It broke out of this big bullish falling wedge, and it's been moving higher, not explosively yet, but it broke out, and so far we have a minor uptrend line here that's working its way up. So my targets are 276, 346, 431 right now, final target. That's the bottom again of the big gap. And if things get really going there, and that's why I wanted to outline these longer term targets, the potential targets, just in case this sector starts to explode and I don't have time to do another update. You have these levels in advance. You can mark your own charts up. Again, work to be done. Maybe the sector just continues in its downtrend. Maybe these are just a few of these stocks having, little bear market rallies. But I don't think so, or I wouldn't be doing the video. LAIX downtrend line needs to be popped. Positive divergence, 84 cents, 107, 141. Again, if I didn't mention it, if you didn't hear me mention it before because the video was paused, if you see a stock that's trading below $1, that may be already, it's possible this one's already filed for bankruptcy protection. I don't know. I haven't looked into the fundamentals on these. That's a pretty cheap stock. And the risk is higher. So if you're going to look at a stock that's say $20 in the sector, or maybe a U.S.-based company that's not priced down in penny stockville, you can put more money into those. This one, you put a smaller amount, and a fraction of what you might put into QQQ or SPY or Apple. Now the benefit is if you're right, or if I'm right, and this thing goes up here, it's 173%. You don't need to put a lot of money to make a nice profit if you get a 173% return, or even to the first target, 66% return. COE, I already covered that, hit T2 today, pulled back, and I still maintain the final target up there, T3 around 365, which again is the bottom of that big gap there. And if things somehow, the sector just starts exploding, maybe those gaps get backfilled, and that would be all the way up to 667. REDU needs to take out this trend line, the minor trend line. You have positive divergence, then you probably have a reaction here at the secondary trend line. There's a potential for a big move here. It's also potential this thing craps out and goes to zero, but if it goes from where it's at now to what is currently my maximum target, again the bottom of the gap right there, 187. You're talking a 200, almost 300% return, close to 290% there. AFYA, again, worth mentioning, got a nice downtrend line, bullish divergence. Seems to be working its way down, walking its way down within this wedge, but it could break out again if the sector gets going, and if so, maybe even looks like the potential here for a complex inverse head and shoulders pattern. Complex, you have two types. You have a regular head and shoulders, which is a bearish pattern like this, right shoulder here, head right there, and a left shoulder. And then a complex head and shoulders, you just have multiple shoulders. It could be two on one side and one on the other, or two on both sides. That's called a complex head and shoulders. Same thing in reverse. This is your head here, and inverse head and shoulders is a bottoming pattern. Again, I'm just showing you something potential. It's because it's not yet formed. So that would be your left shoulder 1, left shoulder 2, right shoulder 1, right shoulder 2, and maybe you only need one right shoulder. So you watch that. Regardless, break above 616, its resistance it's a target as well, first and foremost, if we get there. No buy signals on this one, but that'd be about a 22% run, and then that would pop us up to that final target there, about 1857. STRA, I like this one. Nice clean downtrend line, double bottom at this point in time. If it holds, even if it makes a marginal new low, it's still going to have positive, aka bullish divergence. And this is one you could take a shot here in anticipation of a breakout and a rally in the sector, or you can play it safe and wait for a breakout above the downtrend line and or a break above 60.76. That's again looks like a nice bottoming potential basing pattern, but you know, maybe this looked like that too and that didn't play out. So you got to keep that in mind. This thing has been stair-stepping lower for a while. But again, I wouldn't be doing the video if I didn't think it didn't have the potential to run up here. And right now, let's just say 79.30 is my final target on that one. First, second, and third. Okay, next up, we're almost done. RYB, nah, not crazy about it, but I just figured I'd mention it, put in a divergent low. It's traded through this trend line too many times. I'm going to move on. AACG, that one had a lot going on and had the uptrend line right here. It broke down below and had a big sell-off. Then you put in a bullish falling wedge, an explosive breakout that ran in back tested the uptrend line. And since then, it's been now back testing the downtrend line right here. There's your downtrend line, downtrend. So breakout, rejection off the uptrend line, holding that 143. It's pinch. It's just basically playing ping pong between support and resistance levels. So if we can turn up here, 223 is the first target, maybe another run at the uptrend line, and ultimately max target 346. Not good if the stock drops below $1. Or even, you know, if you want to take it here, you could take it at support around 143, call it 140 with a stop somewhat below that, and then sell if you hit those targets. ZME, that one was mentioned back here in November, I think, or December when I first started highlighting this sector. We had a nice clean, big old bullish falling wedge. It popped it, but it broke out on a big gap up. And it's since faded that. So right now it's kind of in no man's land. So let's get away from that one. That means smack between. There's really not any really good support or resistance nearby. A few more to go. EDU. This one's looking ripe for a breakout. Nice downtrend line right there. It's trying to break out today. Hasn't done it. You want to see some follow through on volume, a solid close, and then your next buy signal or first target and or is 177, and then a pop above 177, bring it up to my current final target there, about $2.50 a share, and that would be a nice run if it's hit. Again, work to be done. But that would be about a 63% gain. FHS, I thought I covered this one, but if not, there's a downtrend line, divergence line, needs to pop that, 213, 246, and then 323 right now. Let's just focus on those. PRDO, downtrend line is not super well defined, but this one's also coming off support right here. Decent, not great, but decent support about 1021. And that is a long-term downtrend line. So if it can pop these downtrend lines, there's your target right there. Minimum target 1251, max target 14. That's what the trend line looks like. It comes off the 2021 highs. YQ, I already covered this one today, gave you an update, broke out. So that should open the door for T1, maybe a back test. And if the breakout fails, then that's not going to be good. But as of now, it's broken out. SKIL, this one's just in free fall. Really no buy signal at this point in time. Had one whipsaw back there, but it's back below the trend line. So it needs to get above that trend line to run. And that's it. No, you know what? I didn't even have that one flagged on my list. I was clicking and went beyond my list. YQ was the last one on my list. So. All right, let's wrap it up here. I'll get the video out to you guys. Sorry about the snafu. Hopefully I covered all of the ones in the sector. And if I missed any from last week's video, or you have one that you found in the sector that you think looks interesting, please add that to the comment section, and I'll be glad to share you my thoughts on it and give you a chart marked up. This has been Randy Finney with Right Side of the Chart. Have a great day.